Hello traders, Gary Wagner here, just about 9:30 in Honolulu, 3:30 in New York on Monday, the 18th day of May, 2015, and this is the daily report for gold and silver. We have gold in essence unchanged to up a couple of dollars today when we look at the continuous contract to COMEX sitting at $24.50, putting it down 80 cents on the day with a low of $21.20 and a high of 32 even. Spot a little bit different. Spot trading up about a dollar, 24 and change, call it 25. Same high, 32, low 21.80. Silver is showing some nice gains on the day, up about 7 cents, 17.64. We've seen the low at 47.50 and the high at 77.50. So traders, of course, we are in long trades, long positions in both gold and silver. We're long gold roughly at 24.80, long silver roughly at 17.56. I'm going to start today's show by looking at a 720-minute or a half a day candlestick chart. This is the spot market of gold that we're looking at, or the cash market. And when we look at that, I really want to draw your attention to the basic channels that we have created in the market right now. We're certainly moving on an upward path. We do have gold trading moderately stronger. Of course, it did make a new high on the day, up around 32, but since has come down, and we're going to take a look at that on our daily chart and another chart that shows us critical levels of support and resistance, and also talk about our exit strategy all on today's show. So traders, even with the market, as I say, trading in essence unchanged, currently trading up approximately 40 cents on the day, it did make this high up at around 32. You can see that right in here. This is the red candle representing the second half of trading. First half of trading, of course, took us to this high at 32. On Friday, I talked about a pattern labeled by Steve Nissan, simply called a scouting party. And on a scouting party, we got our first scout, so to speak, and that came back right before we made the call. In fact, it was one of the things that was important to me, was the fact that we saw this market come up and test this area, kind of testing the fortitude of the bears. Bulls were not able to sustain a price point above our former resistance area, which was sitting at around 23, but has since popped up. This is what is simply called a beachhead within this particular pattern group, or pattern strategy, I should say. And as you can see, we're starting to get a consolidation in the market above former resistance. And as I said, our hope is that this particular area becomes support. And so that takes us to our next chart. And the chart that we're looking at currently is a daily chart. This daily chart is in Japanese average format. Let me kind of frame this a little bit better. As we can see, we are looking at MACD and stochastics on the bottom, Japanese average charts with a very, very short-term Elliott wave count on the top. When we do that, what we do see is as follows. We do have the MACD moving apart. That's bullish. When we look at our Japanese average, lack of lower tails, decent body size, although we have seen a decline or a contraction in the body size here compared to the body size here. But we are trading well above our former, not well above, but above our former resistance, 25.90. My sense is what we're looking at is a consolidation in the market. This consolidation should be followed by an upward spike. Stochastics still indicating that the market is not yet overbought and has some room to the upside. Silver also showing some strength today, currently trading up about 11 cents on the day, 17.67. And very similar to the chart that we looked at with gold, we absolutely can identify an upward channel currently in the silver market. We're looking at the MACD, and also as in gold, we do have our lines separating or moving apart, and that's really what you look for in terms of strength. This is a standard candlestick chart in this today's daily move in the market. Now, we do get a distinct difference, though, when we look at our Japanese average charts. Let me go ahead and kind of widen these a little bit, but when we look at the current chart that we just had up with our channels in there, but we also converted to a Japanese average chart, and in this case, you have a much more defined or strong body size. Now, we are looking at the market trading up about a little bit over 0.5% on the day, but you can see this is the kind of candles that I do like to see in a market that we're long and is moving in our favor, to have decent candle size, because really what that tells us is that there's still some pretty good strength in this current trend. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow for another daily update review. Bye-bye.